Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 381 of our YouTube channel and podcast, and I cannot be more excited to continue sharing with you guys personal finance topics that I think can be useful for you in your long-term financial journey. Today, we are going to be talking about personal finance rules, right, that you can break if there's a crisis, right? Because there are crises in our lives from time to time. There are emergencies, there are things that come along. And I don't want us to think that we just have to follow the rules all the time. Sometimes we just have to survive. Sometimes we just have to, keep the game going while we get out of some type of hole. So I want to talk about rules that I think should be easily broken if there are certain types of emergencies, if there are certain types of crises in your life. And this will help you to be a little more at ease with the decisions that you may have to make if hard times are ahead. So stick around for a discussion of all that and more in today's episode. Before we get started though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan. And that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions. And you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual who's watching or listening to this show on a day-to-day basis. Now, when I come out with new episodes of this show on a day-to-day basis, the thing that I don't want this show to be is just rules-based, right? I don't want this show to be all about following some set of rules. Now, of course, I give you guys the financial action plan, and I think that that is the most efficient way that you can go about reaching long-term financial freedom, being out of debt, building wealth, all those types of things. But that doesn't mean that it's the only way that things are to be done. And walking down that set of steps, that set of preset steps that I have for you there, it's not always done in a way that is pretty, and it's not always done in a way that is just sequential, where you go one step after the other. Sometimes you have setbacks. Sometimes things come up in life that just, set you back in your financial life, and you have to go and fix them. You have to go and make the proper arrangements in order to get your financial life back on track. Okay. And sometimes when you are doing this, other things have to be set aside while you are in the process of getting your financial life back on track. And so we have to get back to square zero, right? We have to get back to the place where we are neutral and we can begin to build again from wherever we previously were in our financial lives. And so in order to do this, we have to be willing to break some rules, okay? And the rules that I have here today aren't necessarily things that are to be broken, but it's things that you don't necessarily want to do that, if a crisis were to come along, then you may have to do this thing. And as much as it hurts, it may be necessary for you to do it. I just want to give you the right to do it. Now, when I'm giving you the right to do these things, I'm giving you the permission to do these things. I don't want you to think that they should or could just be done in any situation, okay? This needs to be some emergency. It needs to be something that is specific. It needs to be something that is very pressing in your life at the moment, okay? So I'm just going to start with the first thing. And the first thing is dipping into your emergency fund, okay? Now, I know I talk all the time about building up an emergency fund and why you should do this, right? It's a great idea to build up an emergency fund. But the reason that we build it up is so that in times of emergency, in times of crisis, we can use it if need be, okay? So you need to have the permission to use your money, your emergency fund, if need be. And some of you may say, oh, well, that's easy. It's my money. If I needed to use it, I would absolutely use it. And some people have that thought process, and some people will pay their emergency fund to the pizza man or to the DoorDash people, right? But that's not what the use of an emergency fund is for. It's for emergencies, right? So we need to make sure that we have this proper mindset around what the emergency fund should be used for. But if emergencies happen, if crises happen, right, then dipping into it is something that you should be able to do. And the reason that people have a hard time with this is because they've saved up this money, and maybe this is even the first time they've had any type of substantial savings. And if you do what I teach and you have 4 to 6 months of household expenses in that emergency fund, then you have a substantial amount of money there. And it's going to be hard to look at that money and go, okay, I'm going to deplete this savings that it took me so long and so much work to build up. That's difficult, right? But when your finances face a strain, the simple answer would be to draw from your emergency savings, right? Which would be just the easy way to take your own money and try to fix whatever is going on financially. Now, you have to remember that life is inherently unpredictable, and emergency circumstances often present themselves with no warning, and they necessitate a prompt response, which is why we have the emergency fund in the first place, right? The emergency fund is not there for something that we could plan for and save for properly. The emergency fund is there for things where there's no way we could have saved for that. There's no way we could have thought that that was going to occur reasonably, right? And if there's no way we could have reasonably thought that it would come, then having that little amount of money there in order to fix whatever it may be can be extremely useful. Now, and what this emergency fund will do, it will ensure that you're able to pay for whatever it is, at least in part, in the short term. And the emergency fund should not be used for anything other than dealing with unforeseen circumstances, as it will come in handy when you need it most, okay? You need to be able to use your emergency fund if an emergency occurs. Okay, but don't just give yourself permission to use your emergency fund at any time for any reason, okay? I want you to know that that money's there. I want you to give yourself permission to dip into that emergency fund and, break that, seal. But once you've broken that seal, don't start to think that it's just, free game to go and take money out of the emergency fund for anything at any time, because it's absolutely not, okay? Once you take money out of the emergency fund, you need to replenish it. And then just, again, act as if it's not there, it's not able to be used until another emergency that you cannot, easily take care of with your own income and cash flow comes along, and you may have to dip into it again, okay? So dipping into your emergency fund is the first thing I want to give you the right to do. Second is delaying payments for some days or weeks unless you're capable of repaying, okay? If something happens tragic in our lives, sometimes it leaves us in a place where we cannot repay our debts, right? Or we can't pay certain bills at the time. And that's tough, right? That's a tough place to be. And so I want to give you, the clearance to, hey, if you can't make the payment on something, then it's okay, right? You can delay your payments, defer your payments, talk to whomever it is that you owe money to, and try to work something out. Because let's just say, for instance, right, you do have debt, which most people do, okay? And I don't think it's the right thing, but it is the thing that is most common. If you have debt, and let's say you're married and your spouse passes away, and your spouse maybe made all of the money, and let's say they didn't have life insurance, or at least not adequate life insurance to continue allowing you to live your life in the way that you have, right? This may put you in a place where you cannot repay your debts in the way that you expected to be able to, right? Which, this is tough, right? It's a tough situation to be in, but unless you're able to, come up with money some other way, how in the world are you going to be able to make payments on some of your debts? I don't think you're going to be able to. So getting some of these, delays, deferments, whatever, or having these, companies work with you to figure out a solution is what you are going to have to do, right? Now, never take on additional debt if you want to live a stress-free life, right? I teach you guys getting out of debt and staying out of debt over the long term is the best way to live a financially free and stress-free life. Even while taking out a loan, right, it's crucial to analyze all aspects and steer clear of common money lenders to avoid falling into a debt trap. While most people, they do have to make, payments, they have to make payments every single month on things and pay interest, right? It's best to delay the bills for, a few days, weeks, or whatever when faced with a financial crisis than it is to, look at those particular bills and go, okay, well, I have to pay these and then you don't have money to eat, or you don't have money to do the necessities of life. This really comes down to the fact that you need to make sure your necessities are taken care of. Okay, you need to make sure that you have your housing, you have food, you have water, you have electricity, you have clothes on your back, you have transportation if transportation's necessary for you, right? It's all about that, because those are the things that have to get paid. And then if you are capable of repaying some of your debts and past any of those needs that you have in life, then by all means try to take care of them. But otherwise, it's not going to be necessary. Now, however, before you delay payments during a crisis, you must be regular in your payments, right? Don't think that you're going to go and delay payments when you're already behind. Now, what delaying payments will do, it will improve your creditworthiness and your trust factor with the lending organization, and they may be likely to allow some slight delay, right? It will give them the ability to trust you, especially if you've been making your payments systematically over time, and now you're at a point where you have an emergency, you're being honest with them, you're telling them what's going on, then they should be able to work with you in a reasonable way, okay? So, delaying your payments in time of crisis may be something that you need to do. Hopefully it's not, but definitely take care of your needs, not your wants, and definitely take care of the things that must be paid for and not your debts in time of crisis, okay? Now, the next thing that I want to give you clearance to do during a crisis, just to put a pause on something or not feel the need to do this thing when a crisis is occurring, is allocating savings towards long-term needs like a house, car purchases, etc., versus the needs of the immediate crisis. Now, again, this is all about, taking care of your needs, not your wants. Okay. And that's a big part of any type of, crisis management, risk management, emergency management, making sure that the things that you absolutely have to have are taken care of. Right. You think about all the people who, they're doomsday preppers, right? They try to prep for the worst possible scenario. What are they doing? They're saving up water and food and making sure that there's shelter, right? They're taking care of the needs, right? And even though I do not condone being a doomsday prepper, what I do condone is in times of emergency, having your needs taken care of, okay? Now, one lesson that we have learned from even the pandemic is the need to have cash on hand, right? Relying on others for financial support during a crisis can have an adverse impact on your finances as well as your relationship with that person in the long run. We don't want to be borrowing money from people. It can really strain relationships over the long term. Now, therefore, what it's critical to do is to invest in instruments with high liquidity, right? Liquidity meaning the ability to turn it into cash, right? Or buy or sell it, so that you can rapidly liquidate your investment and receive the funds in an event of a financial emergency. Rather than allocating resources to long-term demands, such as a home or a car, you can put your money into things that can be liquidated quickly when needed. Now, another way to look at this is, when you are in crisis mode, right? When you are trying to just figure things out and clean things up, the last thing that you need to do is to be worrying about, paying extra on your home, or trying to save up to buy a house, or trying to save up to buy a car, right? Ultimately, your money needs to be going towards the crisis. Now, I know that this may hurt your thought process, right? It may hurt your plan and your straight line ability to do exactly what you wanted to do in the timeline that you wanted to do so, right? But ultimately, if we don't have money to take care of the immediate needs of the crisis, and yet we're allocating money towards a house or a car, like that just doesn't make any sense. Take care of your needs first, and then you can allocate towards the wants that you have. And those long-term wants, there's an absolute necessity to save up for them. I completely understand that. And you should be doing that systematically over time if that's something that you have your mind set on, if that's something that you're going to need over time. But to put that on pause and to wait on that in time of crisis is, astute. It's something that is smart to do, and I would suggest it because, what good is being able to buy a car if, you are, underwater on your, I don't know, your mortgage? Or what good is it to put money away to buy a car when, you owe medical bills, or you're going to have to go into debt for whatever it is that this emergency is bringing along, or you can't cover your needs because you lost a job, right? It sounds foolish, and it is, right? So that's why when an emergency happens, we want to make sure our needs are properly taken care of, all of those things I named off earlier, right? And then go one by one through the elective things, right? Go one by one through the things within your budget, obviously, that are elective, that you maybe could pay, but going a month without paying it wouldn't be a big deal, or something that you don't necessarily need. Or I think about this all the time, that if worst came to worst, obviously you could stop saving any extra money within a crisis, right? You could stop investing any extra money, which we're going to get to that here in just a second, right? And you can stop doing all of the optional things with money, and then really bring your budget down to a bare bones budget. Because I don't know about you guys, sometimes I feel like my budget is pretty tight, but then I think about where a lot of the money goes. I think about the savings and the investing and all those types of things, and I go, oh, well, there's actually a whole lot of margin in this budget, but we do some forced scarcity, right? We force ourselves into this place where we have less residually in order to delay gratification to the future, right? Which brings me to the next thing that you could do in a crisis, that you should be able to do, that you should have permission to do in a crisis, and that is you should have the permission to not invest in things like high-risk assets, stocks, cryptos, all these types of things. Investment decisions are affected by several factors. When it comes to investing, there's no one-size-fits-all answer. So before investing in assets like stocks and cryptos during a crisis, right, you need to assess your entire financial situation. It's critical to keep an eye on the market for opportunities to buy high-quality assets at low prices, 100%. All right, I tell you guys all the time, I'm not looking for you to be a speculator. I'm not looking for you to be somebody who's just focusing on the price of certain assets. But if you're an index fund investor and you see the value of, let's say, the S&P 500 drops 20%, right, which it did in March of 2020, and it will 100% do again during most of our lifetimes, right? If that happens, then it's a perfect time to buy. But you may look at the reason that it's happening and say, oh, well, this impacts me more, and maybe I don't need to be putting money to work in investments, and rather put money to work in my own financial life, my own immediate life. So the pandemic's a great example. At the very beginning, people losing jobs, people not being able to work, right? It's great if you had the money to put in to invest, you had the money that was residual to you, you kept your job, and you were able to begin putting more in at lower prices as the market fell by like a third, right? That'd been fantastic, right? I did it. But if you may have been on the chopping block and you needed money to take care of your immediate needs, and you needed to take care of your family and all those types of things, then it makes perfect sense why you could break the rule of investing systematically and buying the dips here, because you need to take care of your immediate financial needs and not just leverage everything on the idea of buying the dips in some type of asset like your investment account. So ultimately, what am I saying here? Ultimately, what I'm saying is that your investments are not more important than your immediate financial life. Of course, your investments are important, and of course, we should be putting ourselves in a place where we take our residual income and we invest it systematically at a pretty high rate over a long period of time, right? But if there is crisis, then by all means, don't necessarily feel the need to invest, right? Don't feel the need to continue putting money away in that place, right? Like I was saying a moment ago, if a big emergency happens, let's say you lose your job, especially if you lose your job, I would absolutely stop investing for some time, right? I would stop investing and just go to a bare bones budget, the absolute needs, right? And then, whatever minimal wants within there, right? But I wouldn't be investing money in retirement. I wouldn't be putting money in an HSA. I would be using all of the extra income that I had to take care of me and my family during this time when your income is cut. Okay, so you really need to make sure that you don't get so caught up in the idea of having to invest, having to delay gratification, having to grow your money over a long period of time, that you don't realize that, hey, sometimes you need to just stop. You need to just wait. And you need to just weather the storm. And then once you have that storm weathered and you're on the other side, then things have worked out, and you can finally move on into a place where you can do the normal financial things that you were trying to do before. Look, I'm all for taking advantage of advantageous pricing in a crisis, especially a crisis that is more widespread than just your household. But sometimes crises are in your household, right? Sometimes a lot more times than crises happening systemically, happening all around us, or on our country's level, or on an international level. Far more often you see crises that just happen in a household. And if a crisis is happening in your household, then you have to be willing to set aside some of the conventional rules of investing and saving and doing the prudent things financially to just survive, and to just make sure that we don't go deeply into debt, that we don't get further behind in our financial space than the emergency is going to put us, okay? And then do what you can do to control where you're at. But investing should not be at the front of our minds, and picking assets at low prices should not be at the front of our mind when we are trying to survive an emergency situation. Then, the last thing that I have for you guys, the last rule that I think you can break within a crisis, is not sharing all of your financial details with your close confidants, your family members, etc. Right? Investing is a personal decision, as is money management. And while we usually keep our closest confidants informed about overall financials, it's completely acceptable not to do so in the case of a crisis. Although the goal of investing in insurance is to help your family and secure their future, crisis often calls for some dramatic measures, as they can be trying times. Okay, if there's any time that we may need another set of ears for our finances and another mind for our finances, and somebody close to us to help us walk through a situation, it may be a time of crisis, right? It may be somebody passed away. It may be that you lost a job. It may be that you don't know what to do in some situation in your financial life, right? And it may be perfectly fine to get the people closest to you to help you. But it may also be perfectly fine to look and go, I don't want to share everything that I have here, right? I don't want to share the pain. I don't want to share the things that are hurting right now, right? Of course, they can help you. Of course, they can walk you through some of the difficult things of life. But sometimes we don't want it either, right? So as much as I tell you guys all the time to communicate, right, and to be accountable to other people, of course you want to be working side by side with your spouse, right? That's non-negotiable. Everything needs to be communication with your spouse, working with your spouse, doing what you have to do together, because it is both of your financial life, right? But when it comes to, let's say, your in-laws, or it comes to your brothers and sisters or aunts and uncles or whatever, they don't need to know every little thing that's going on in your financial life if you don't want them to. But they could potentially be really good tools, for lack of a better term, for you and your family in order to get back on your feet. Because maybe you lose a job and you have somebody close to you that's a headhunter, and they can help you, or a recruiter, and they can help you to find a new job, find a new position. Maybe you've had somebody pass away in your family. Let's say your spouse passed away, God forbid, right? But let's say your spouse passed away and you don't know what to do with their life insurance. Well, maybe you have somebody who sells insurance in your family, and they can help you do that, right? Family and friends can be really, really useful when it comes to emergency situations. But just let them be as useful as you need them to be. They don't have to be right in the middle of your business all of the time, right? So what is the bottom line of everything that I'm saying here today, right? The bottom line is that a crisis can throw life out of gear and disrupt our plans, right? I'm sure many of you, maybe even in the past couple years, have had a substantial crisis occur in your life. Okay, so it always helps to have a backup. It always helps to have things there that are contingency plans that are going to be in place in case something were to happen in your normal rhythms of life. Now, the aforementioned tips that I gave you here can come in handy if you're dealing with an unexpected financial crunch, and they can help you get by in a difficult time. And I don't want to be negative, right? I know it's Monday. I'm starting off the week with something here that's not the most glowingly positive topic, because I'm talking about crisis and emergency and all these types of things. But it's necessary, right? It's necessary to know what you can or cannot do in times of crisis, or what you should and should not do in times of crisis. Because let me just key you in on something if you don't already know. Crisis is going to occur. Emergencies are going to occur. Times of difficulty are going to occur, right? But they don't have to be times of panic. Okay, and I want that to be very clear. Crisis does not have to be panic. And a lot of that has to do with your preparation. A lot of that has to do with what you are prepared for already. Do you have an emergency fund? Are you deeply in debt? Do you have residual income that you can use for things that are going on in your financial life? Right? And if the answer to all those things is yes, then you don't have to panic, right? You don't have to panic in times of emergency, in times of crisis, right? But for people who are deeply in debt, they don't have any emergency savings, they don't have any residual income, then it's going to be very difficult, right? It's going to be very difficult, and it can turn into some panic, and it can turn into some bad financial decisions compounded on top of other bad financial decisions that you have made already. So I just want to help you make the best decisions possible. And hopefully, none of these things that I've listed today have to come into play for you. Hopefully, you don't have to consider the thought of taking money out of your emergency fund. Hopefully, you don't have to consider delaying payment on any of your debts. Hopefully, you don't have to stop saving for a house or a car. Hopefully, you can keep investing in stocks, mutual funds, ETFs. Hopefully, you can keep the relationship that you have with your friends and families about money and not have to put a kink in it any way during some type of crisis. So hopefully this is helpful to you, right? Hopefully this helps you if you are in the midst of a crisis, to know what you can do, to know things that maybe you shouldn't consider, and to know things that hey, maybe I never thought of that, and I can delay some of these payments, or maybe I do need to use this emergency fund in this situation, or I do need to stop investing or stop saving here or there, right? Just some things to think about, and some things to help you to prepare if you're not in the midst of a crisis for the crisis or emergency that may come in your life later on. So thanks for watching this video. If you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan. And that's really good supplemental materials to all the things I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions. And you and I can begin working together, pushing towards your long-term financial goals, and ultimately pushing you on towards long-term financial freedom, which is what I hope for every single individual who's watching or listening to this show on a day-to-day basis. So tune in tomorrow as I continue talking about personal finance topics that I think can be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.